Hello and welcome back. Francois, hello.
Hello, Mark.
Nice to see you. Thank you for joining us, as usual. The US is proposing import tariffs on all goods from 2025, and the numbers are huge. They are proposing 60% on Chinese goods and 10% on everyone else. However, since the nomination of Scott Bessent as Treasury for next year, there are some doubts whether this could be implemented as they wished just a few months before the elections. First of all, Francois, what is your thoughts on how this is going to play out and what are the effects globally on tariffs?
Okay, tariffs are never a good thing for the world economy, because it means that you have restriction in terms of trade flows. It means that potentially for the US economy, which is a huge importer of components in the value-added chain, it means increased prices, more risk of inflationary pressures, and etc. When you look at development on the market after Donald Trump's election, it was really what the market was pricing in. You had a strong dollar, you had upward pressures on long-term yields, you had revision about the forecast concerning the development on the central bank. So really the market was fearing that tariff would be implemented, and that was something that was very important. What you need to understand is that at the end of the day, the key question is, the tariff the problem, or is the fear of tariff the problem? Really, since the election of Donald Trump, the fear of tariff was the problem. What is interesting with the nomination of Bessentis, the new Treasury guy, is that potentially the market changed his mind in the course of the last few days, because the guy is supposed to be somebody who is going to be less keen to go for a strong tariff policy.
Let's assume they will impose import tariffs. What are the effects on the macro side, first of all, and then let's go through the sectorial effects. Inflation, you mentioned inflation just a few minutes ago. What is the effect on US inflation in particular from tariffs?
The fear is that the inflation is going to go up, and people were expecting the move for inflation, which was coming down over the last few quarters, that the move was towards 2% by the end of next year. Suddenly, there was a reassessment of this kind of development because tariffs are potentially increasing inflation. Where there is a difficulty, if you look at the economic program that was proposed by Donald Trump, is that on the one side, you had elements that would be non-inflationary. I would say that deregulation is one aspect that is important in this regard. Deregulation would put downward pressure on prices. You had some dangerous element, which was lowering taxes, because lowering taxes means stronger demand, and potentially it can impact the inflation rate, but not significantly. And then on the other side, you had two policies that are considered as dangerous for inflation over the medium term. The first one being the tariffs, because as you said, the initial proposal is quite huge, 60% on Chinese goods, 10% on all other goods, plus 100% for countries who refuse to do their trade in US dollar. And the other element that could be inflationary because it's through wages, it's the fact that the immigration policy would be significantly strengthened, and you had this notion that it would expel some people from the US immediately. So potentially, there is a fear that the inflation is not going to go as low as expected and could rebound in the coming quarter if everything is implemented.
And therefore, are you suggesting that this could have an impact on the Federal Reserve's policy in the next few months? They may take a wait and see kind of approach?
Exactly. That was an element that has been really priced in by the market since the result of the election. That's the reason why when you look at expectations for the end numbers for interest rates, short-term interest rates in the US, which were close to 3.5% before the election, now they are around 4.25%. It means that people believe that due to the fact that the policy, and especially the tariff policy, could increase inflation, the Fed is going to be much more cautious in decreasing interest rates over the medium term. And it's also reflected in the bond yield. The tension that you had on bond yields, long-term 10-year bond yields, which was quite significant, has really accelerated after the election result. And this is connected to the fact that less monetary policy loosening plus risk of inflation needs to be priced in the bond market. And that's the reason we were close to 4.5% last week. But it is also one of the reasons why suddenly over the last few days, the 10-year bond yield have gone down quite significantly with the selection of Bessentis.
Okay, what does this mean for the US dollar then?
The tariffs and as I said, the potential effect on interest rates have supported the dollar. It was connected last week, really, with, you saw, the euro went down to below 104, and it was linked to two elements. On the one side, this tariff issue, and the fact that interest rates in the US could fall less than expected, but it was also connected to the publication of poor numbers in the euro area. PMI indices were weak. They were much weaker than expected. So the market has priced the fact that tariff could induce a divergence in the monetary policies between the US and Europe, and it has supported the US dollar. Again, this morning, the dollar is weaker. It's connected to a reduced fear concerning the tariffs.
Let's take stocks now. Let's take US stocks first of all. Are there any stocks that could benefit from the fact that they are being protected to a certain extent from imports?
I think that one of the bets that you could have with tariff is small and mid-cap company in the US. If they are protected, they would be subject to less competition. It would mean that it would be good for this kind of companies and the segment of the small and mid-cap. But again, and we discussed that earlier, there is an element that is also key for small and mid-cap. It's the level of interest rates, because you always need to remember that there is a lot of debt in the small and mid-cap, a lot of loans, debt in the small and mid-cap company. So those two elements, but the tariff could be supportive for those stocks. It would be supportive for stocks that are not necessarily connected to goods, because service industries would not be necessarily subject to trade wars. So that's something that could be interesting, like the financial sector. It could benefit from the fact that if there are tariffs that are spreading around the world and a commercial war, the financial sector could be protected. The other sector that could benefit, vehicles, automobiles, could be the beneficiary. But again, you need to make sure that it's possible for them to substitute for the fact that they are importing a lot of things coming from China that are put into the value-added chain. And so it means that if the tariffs are implemented, they would have an impact on their prices, because they would have to raise their prices, their final prices, and it can be a detracting effect on demand in the US. So that's the thing about tariffs. You know where it begins, you don't know where it ends.
Which one of the biggest, amongst the biggest imports the US has are pharmaceuticals and cars, which immediately makes me think of the big European economies, plus Switzerland for pharmaceuticals. How much of an impact is this on the European economy and European stocks?
It's quite significant in terms of economy. You know, the numbers, it's always difficult to make a complete assessment, because there is a dynamic, you know, in the process of tariff or commercial war. The estimates that I saw is it could reduce the GDP of the euro area by 0.5%, which is quite a lot considering the fact that the European economy is quite weak and that people are expecting something around 1%, 1.1% GDP growth in 25 without the tariff. So it means that, again, it could favor stagnation in terms of European economies. So not a good development, and something also that would not necessarily be very good for the stock market in Europe, because it would mean that EPS would be under pressure. And it means that valuation that seems cheap would be revalued in terms of its cheapness, because then you need to reassess the development of earnings over the medium term. It could have a significant impact on earnings. So it would be a negative for Europe.
I'm just looking at luxury goods now. taking 10% off the margin of, or maybe it wouldn't take 10% off the margin. Maybe prices would adjust upwards. But what could be the potential effect on luxury goods from, say, countries like, obviously, France and Italy?
Okay, when you look at the results that were published for the major luxury brands in the third quarter, clearly you could see that they were suffering from the Chinese development, and one of the market that was quite strong was the American market. So you need to keep that in mind. When it comes to raising prices, there is a problem. Luxury brands have increased prices following the COVID, and there is some effect that is already looming in terms of reducing the demand. That's one of the reasons, for example, why Louis Vuitton experienced a fall in sales in the third quarter, something that was absolutely not expected. So it would be a negative for the luxury brand, and I think that it would be something that you need to keep in mind. Nevertheless, and you need to also be aware of that, as I said, tariffs tend to push the US dollar higher. So they would benefit from the fact that the US currency would be stronger. And so when you translate that into the profits in euros, it would be a positive. So difficult to assess. It's again a threat. What we need to understand with this story about tariffs is clearly an uncertainty. It's clearly something that everybody needs to have in his head when he assesses the financial market for 2025. We are not able yet to say if this is just a bargaining tool from the Trump administration to obtain some concession from the trading parties, or if they want to implement that. And I don't think that this uncertainty is going to be resolved in the very short term. But this is something that people need to have in their mind when they assess the way they want to be invested for the next year.
Let's turn to China now. 60% tariffs is a lot to digest. Would the reaction of the Chinese be quite simply to allow for an adjustment in the
It could be, yes, but this is exactly what you don't want, and this is exactly what some people fear, is that you enter into a process of a commercial war. Is that not only you have tariff, but you have the side effect, and the dynamic getting into play is first the US put in place tariffs, then there are reaction in terms of tariffs that are coming from the other parties, and then you have also the impact on currencies, let your currency go down, which is also something that is in a way a commercial war, and that's the dynamic that you don't want to enter into. And yes, you are right, they could let their currency go down. And at the end of the day, people need not to forget that for the time being, the Chinese economy is suffering the risk of a deflation, and they are in need of an export market. They are in need because even if they are able to put in place some support program for consumption, you cannot do that from one day to the other. So they are in need of that. So this is trade war would be something damaging for the world economy, to my point of view, and people should still keep that in their mind.
Just lastly, are there any European sectors that you would favor, assuming that tariffs would be introduced?
Again, very difficult to say. Again, I say that the service sectors would be more interesting than good producing sectors. Would I favor or would I remain very cautious? I would be very cautious, for example, on cars. I would remain cautious on car as long as I have no more visibility on that front. I think on the consumer discretionary in general, you need to be careful. Raw materials, I'm not so, for me, is not a big problem. And service would not be a big problem. It's more the sector that you want to avoid than the sector you want to favor.
Okay, Francois, I think that's all we got time for. Thank you very much indeed for your thoughts. Speak to you next week.
Bye-bye.
Bye-bye.